Good morning, everyone. The name of this panel is FUD, Perceived versus Real Risks. I'm joined by three panelists that I think don't really need an introduction. If you've been into Bitcoin for over a month, you probably know all three. Regardless, I'll let you guys introduce yourself real quick.
Rodolfo, NVK on Twitter. I run CoinKite. We make a code card and OpenDime and Block Clock. That's pretty much it.
Yeah, I'm Jimmy Song. I wrote Programming Bitcoin, available on Amazon from O'Reilly.
Eric Voskuil. I have been developing on Bitcoin for about 5 years, and I write and speak extensively on crypto economics.
All right, so FUD, Perceived versus Real Risks. The idea is going to be simple. I'm going to throw out statements, and then you guys can respond. Some of them will be more technical, some of them will be more economical, or some topics will probably have more agreement between the three of you, some maybe a bit less, and it's up to you guys to say smart things.
Can't guarantee anything there.
All right, let's start with a simple one. Bitcoin is too volatile to be used as money. Who wants to kick this one off? Eric.
It is used as money, so.
we got like 45 minutes to fill, Eric.
So Bitcoin is a need thing, not a want thing. It was created so people can do things that may not be necessarily allowed. And the people who need something will get over the price volatility. It doesn't really matter.
Yeah, the way I look at it is, okay, who's saying that, right? Who's saying it's too volatile to be money? And it's typically people that want Bitcoin to have a particularly pegged value, more or less, to Bitcoin. Any sort of asset is going to be volatile unless you have a purposeful peg that a central bank enforces or something like that. In my view, when you're talking about volatility, you're really complaining about the fact that two things are not really correlated enough for your taste. But that's not a realistic assumption for any kind of commodity or asset, especially one that has demand fluctuations as Bitcoin does. So, I mean, they're complaining mostly because they want to be able to buy Bitcoin and use it to pay for something. And that does happen for some people, but that's not the major use case. The major one is store value, at least in my estimation. That's why people pay attention to price so much. And they're really complaining more about their wealth going down in dollar terms. I mean, nobody ever complains about volatility when it's going up. It's only when it's going down that people ever complain. So,
well, let me give a concrete example. No one prices their goods in Bitcoin. Like no store or no salary is priced in Bitcoin because
there's a couple of things. Altcoins tend to be priced in Bitcoin, and like cassatious coins or like physical Bitcoins or whatever, those tend to be priced in Bitcoin. Other than that, yeah, you're right, and that's more a unit of count thing.
So is that not a problem?
Nobody prices things in gold either.
Yeah, I mean, eventually I think people will, but I don't think we're at that stage of monetary evolution yet.
Well, price is just a function of what's in people's minds. So price always has some volatility, but the a primary cause of volatility is low volume, right? The more something is transacted on a regular basis, the less volatile it tends to be. So Bitcoin is very, very thinly traded security, so it's highly volatile. I mean, it's going to be that way.
It's a small base.
Yeah, there's definitely a relationship between liquidity and, I guess, smoothness of the volatility curve or something like that.
So is the consensus on this panel that it will even out eventually?
Maybe not.
I'm not sure, because like if you think about it, as more wealth comes into Bitcoin and away from fiat currencies, then like there might be more liquidity eventually in Bitcoin, in which case like Eric was saying, then you wouldn't have as much liquidity in the fiat currency. So,
Right. Like you mentioned, Rodolfo,
yeah.
you mentioned gold things aren't priced in gold, but they used to be.
Yeah.
When
Yeah,
gold was
sure.
a highly traded money. I mean, there's still as much gold held. It doesn't disappear, really. But it's not used in trading. So the lack of trading in it is what increases the volatility.
You know, some markets would have, you know, specific goods that were priced in Bitcoin for a while, even not in dollar.
Yeah.
So it's people will do what makes sense for them financially at the time.
Yeah.
You know, the idea that Bitcoin is going to, you know, take all this money from the traditional financial markets, you know, it could happen, but it would still also take, you know, decades. I mean, money, like, I mean, gold is thousands of years old in terms of usage, and Bitcoin is 10 years old. So we have a bit of a way to go.
All right, next topic. Altcoins and forecoins are a threat to Bitcoin. Jimmy, do you want to kick this one off?
Sure. I don't believe they are, because Bitcoin is the one that is unique. Bitcoin is the one that's actually decentralized. Altcoins are all, as far as I can tell, very centralized. They have a creator, a benevolent dictator for life, usually some sort of foundation, oftentimes like centralized services where only 2 or 3 nodes are actually made. Sorry,
Yeah,
is anyone getting feedback?
Yeah.
Okay.
It's only your mic, man.
I think so.
Sorry.
I'm trying to cut you out.
It's the head.
Yeah, maybe there's tinfoil under here.
I tip the AV guys.
You know, it's my mic.
Well, Okay, definitely still hearing feedback. Not sure what's going on. All right. Yeah, might have to put curtains over these walls or something. Anyway, yeah, so altcoins to me are very different than Bitcoin, because they have a central point of failure, a place that can be choked, and that makes it very different. Now, are they a threat to Bitcoins? Like, it really depends on what you mean by threat. Like, can it overtake Bitcoin in market cap is usually what people mean, and I don't think it can. I mean, it's entirely possible by artificially pumping, like Ripple, for example. I think at one point it was, you know, like $4 or something. So if you took the entire supply of Ripple, I think it was like a billion of them, or trillion, 100 billion of them. Yeah, it would have been higher than Bitcoin's market cap at some point. But yeah, I mean, is it sustainable that way? Not really. It's much less liquid than Bitcoin is.
So let me then make the argument concrete. One of the arguments in favor of Bitcoin is there will only ever be 21 million. Now, if you can print millions of altcoins, what is that 21 million cap worth?
Well, I mean, it's a completely different supply, right? Like, so you have Bitcoin, which is one place where you can store your value and you know the rules of the game. And then, you know, you have the other stuff. You know, just because you can buy chickens instead of cows, it's not a threat to cows that chickens exist.
But what's unique about Bitcoin then?
Bitcoin tells you the rules of the game and it promises to keep them, right? I mean, that's the idea. I mean, as long as we have enough hash rate and, you know, there's people using it, you know the rules of the game. If that changes, then you could consider that that change is an altcoin now, or you can take a different view and just say that, you know, Bitcoin is not what it used to be, if there is no interest in the original chain, and move on with your wealth somewhere else. It's just a nice voluntary way of buying chickens.
Yeah, and that argument is akin to saying like silver means that the supply of gold is expanding. It's two different commodities. I can't wait, for example, for when Bitcoin Cash, for example, when its block reward gets so tiny and there's
Bcash.
Yeah, Bcash. Sorry. When its reward gets so tiny that they really essentially have no security, and they're going to be forced to inflate at some point in order to reward the miners enough so that they have enough security. But that's the big difference, right? Like, you have altcoins which are centralized, Bitcoin is not. And like they're very different commodities. You have something that's actually scarce and has a history of being scarce versus something that's not really, like that has no proof that it's really scarce and a central entity that controls it essentially.
Eric?
Yeah, so I'd treat the question a little differently. When you say we've been discussing altcoins that exist, and I'll assume that all those statements about them are true. I wouldn't necessarily disagree. But there's no reason why an altcoin can't be everything that Bitcoin is. I mean, just start over at the same Genesis block, right, or a new one. So the idea of an altcoin as being a threat, I mean, some people say an attack, right, and really an altcoin is competition. And you can view that competition any way you want. Silver's competition for gold. If there was only one option for money, that money would presumably take on more capitalization. That doesn't necessarily mean anything except to the people who held it before that happened, right? It's the number of units you use in a money is pretty much irrelevant, except in terms of divisibility. So, yeah, there's no reason why an altcoin can't be just as secure, et cetera, as Bitcoin. Due to Thier's law, which is kind of the opposite of Gresham's law, which is, one money is essentially better than many, all things being equal. So Bitcoin has a bigger network. There's more people trading in it. If another altcoin came along that was basically the same, which has probably happened many times, it tends to struggle, but it's still competition. And if Bitcoin reaches a point where, say, fees start getting really high and people don't want to use it anymore for certain things, that competition can be effective. Just like silver can be effective competition for gold.
So what you're saying is Bitcoin is actually not necessarily unique and it can be overtaken.
Well, it's certainly, I mean, it's unique in its success, right, and it's in the size of its network. But as a technology, it can be reproduced trivially.
It's just a first-comer advantage. That's all we have.
Well, I'm not sure. So I disagree with that.
It might not
part.
have been first, but it's bigger, right?
But
sorry.
You have decentralization in Bitcoin. I don't know if you can reproduce that in another coin, right?
Right, you don't know it. In other words, it's possible. We haven't seen it yet.
It's possible.
So what do you mean exactly with decentralization in this context?
Single point of failure, right? Like, and this was very obvious to me when you started seeing hard forks, because that's exactly the same code base, more or less, for a lot of these, Bcash and BSV and all of these. But what you saw was that there was an organizational problem, and the coordination problem became so difficult that you essentially ended up with a benevolent dictator for life in these forks, because otherwise you couldn't get anything done.
See, I don't disagree that Bitcoin is not better. Bitcoin is better, right? But that doesn't mean that something else could not come that is better than Bitcoin. Like, I mean, it's the same way that, Bcash was around, and then Bitcoin came and it's better. I mean, it's just somebody else.
You just have to realize that there's really no reason for another something just like Bitcoin, because there is Bitcoin. But it won't be until that need arises that something will actually be effective, and there's no reason why it can't happen.
Well, I guess my disagreement is with the difficulty of decentralizing a currency. That seems to me, it took like a very particular set of circumstances for Bitcoin to achieve that, including Satoshi essentially just leaving the project. If we didn't have that, then I think in some ways it would still be centralized. But as it was, because of this like very special set of circumstances, is that reproducible? Possibly, but I haven't. There's so many coins that have tried and have completely failed in that regard. So, is it possible? Probably, but I don't know if it's as easy as people make it out to be. Is essentially what I'm saying.
All right. Next topic. SegWit activated in 2017 after months of debate and the UASF and miners blocking it and huge discussions in the community. Can Bitcoin even evolve still? Like, will the next soft fork be able to activate? Are hard forks possible? The concrete statement is Bitcoin cannot upgrade or evolve anymore.
I I have a personal preference of pure ossification going forward.
You don't want Bitcoin to upgrade or evolve?
I mean, you know, like...
Not even something like Taproot?
As somebody who makes, like, products for a living, like, it's never ending, right? You can always add a new feature, like, it's forever. I mean, I'd like to have those features. I love Taproot. I love everything that, I mean, the list is amazing. But, you know, the human time cost that some of these things have, because nothing in Bitcoin won't be contentious. So, you know, I think they should still be proposed. But I don't necessarily oppose ossification. You know, TCP/IP has been around for quite some time. It's pretty old tech, and it does the job. I mean, look at even IPv6 has problems, right? So, I mean, it's kind of like a nice to have, but it's not a must have. I think Bitcoin already sort of gives us almost everything we need plus for the current need.
So you actually agree with the statement that Bitcoin might be hard to upgrade or evolve, but you think that's a good thing?
The hard part is the definition issue, I guess. It's more like, you know, technically it's not that hard anymore, right? But I think people greatly underappreciate the human time cost that this battles take. Maybe it's a good thing. Maybe it sort of pushes away people with different time preference around this stuff. Because, you know, I bet most of the people in this conference are kind of in this for the long run. You know, it has a cost. And, you know, I don't know, I guess I'm on the fence in terms of where this would go.
Eric, Jimmy?
I mean, it's, if people want new coins, changes to a coin, it's very easy to do. It may be just hard to get people to go along with you. So if people want it, they can have it, yeah. Right? So, you know, I think the question kind of focuses around the issue of getting miners to go along with implementing essentially a 51% attack on the coin. That's what a miner enforced soft fork is, right? If half the miners agree to not build on other miners' blocks who are not going along with the change. So the question whether you can get that many, you know, that much hash power to go along with the change is an interesting question. If you've only got a few miners, which is that equal that percent, which is kind of what we tend to have, which is kind of inherent in Bitcoin. It gives a greater reward to a larger miner, so you kind of tend to end up with that 50% miner all the time. So yeah, that can be a challenge, but if people want it, they can just go create a new coin and, you know, have something new. It can evolve in any number of ways. That's the great thing about Bitcoin. I mean, people can do what they want.
Yep, through voluntary system.
Yeah, it's weird because that question kind of assumes that Bitcoin is primarily a technology. To me, it's money. And for money, it's better when it doesn't change. And, you know, it's sort of additive features that are completely backwards compatible. That's essentially what a soft fork is. And having that very stable base layer is a feature, not a bug. And the people that are like, hey, well, Ethereum is Bitcoin 2.0 and EOS is like Bitcoin 3.0 or something like that, they have a completely skewed view of what this whole thing is. It's money, and you want it to stay stable. And like the idea that you need to evolve it or something like that is a completely misplaced notion that mostly comes from Silicon Valley, where they see everything as like a tech play, and instead it's when it's actually a monetary play. As far as like soft forks and whether or not we'll get them and things like that, SegWit obviously was a very contentious thing. Fortunately, a lot of those people left, right? And this is, again, one of the great things about Bitcoin. If you disagree, you can go leave, right? Like, and do your own thing, and you are free to do that at any time. And that's a feature, again, not a bug. A lot of people say, well, now you have like this toxic culture, and you know everybody hates each other, blah blah blah. Well, like if you disagree enough, then you can go and make your own thing. That's totally fine. So in many ways, I expect the next soft fork to be less contentious than the previous one. But you know, who knows? It's possible that there's a much bigger clash going forward. But yeah, it's okay if it doesn't. Like the base layer works great, and you know, would we like to have additional features so that Lightning is much easier to implement and things like that? Yeah, absolutely. I would love Schnorr. I would love Taproot. I would love SigHash no input and all these other features that are coming in. Is it completely necessary? I mean, not exactly. It works great as it is, and it's, you know, adding additional features is great, but you don't it's not necessary.
Right. That seems to be kind of the consensus of this panel then, so we can move on, right?
Well, I would add that, you know, yeah, it does work great. At least it's perceived to work great today, but the privacy features that people are working on, you know, which I don't directly work on, and most of my stuff is what already exists, but I think are essential because Bitcoin is, you know, not so great when it comes to privacy, and as a money that's designed to withstand state controls, that's not good. So I think somehow it needs to evolve to be more private.
I guess the contention would be like how to evolve. You know, you can figure out other ways to sort of get around.
I think the agreement is it can evolve,
exactly,
right? But maybe in different ways. I don't know.
I'm not sure if people really care that much about privacy.
That's because most of the economy is white market right now.
Exactly.
They'll care when it's not
Most people
anymore.
are not going to jail yet.
Yeah, exactly. I mean, as a money that's censorship resistant, the question is, you know, who's the censor you're resisting? It's the state, right?
Yeah.
And that's why I refer to Bitcoin as a black market money. If the state decides to say, well, okay, this is not lawful anymore, then the white market literally disappears. Yeah. Everything that happens in Bitcoin is now black market, even if it's white market in some state. That's black market from the perspective of all the others. So now we have this white market, black market question, and is privacy important at that point? Yeah, it's real important.
There is a war on cash.
All right. Bitcoin is not good for payments and not used for payments.
It's kind of preposterous, but yeah.
I bought 2 beers with it yesterday,
yeah.
or 2 days ago. So.
You know, buying an asset for another asset is buying. You know, like there are transactions, like trading is buying. And how the money is being used is none of your business, essentially. You know, if people want to say the lattes are the right way of using it or not killing babies is not the way to use it, you know, it really is none of your business. It's like people are using it, there's transactions, so.
Well, I think, Jimmy, you've suggested people should use a credit card and,
yeah.
and then pay off the credit card by selling off some Bitcoin by the end of the month.
Yeah, I mean, from a tax and organization perspective, that makes all the sense in the world. Instead of like keeping track of like every latte that you've bought with Bitcoin, you know, you can just have one bill. You're also going to get credit card rewards. You're also going to be able to you know, do a chargeback if the merchant didn't treat you right or didn't deliver on the service or good. And there's a multitude of reasons right now to be using a credit card than Bitcoin. Now, as things progress, the incentives might change, at which point it might make more sense to do, say, a Lightning payment to go and get a latte. But right now, those incentives aren't quite there yet. And until they are, you can't sort of browbeat people into saying, oh, you need to use Bitcoin for lattes or, you know, to pay your rent or whatever. Like, it's not convenient for people. It's not something that they want to do. You're not going to be able to force them. Those are the words of a dictator, not a free market person. So to me, like, using a credit card makes economic, rational sense at the moment, especially if you're paying it off with Bitcoin. I mean, I don't necessarily think that's a great move either. Like, if you have fiat money, that might be a better way to just, you know, get rid of your fiat money. But, you know, I mean, you do what you want to, right? Like, I'm a libertarian. I think you should have the freedom to do what you want to, and you shouldn't be bullied into using Bitcoin a particular way that somebody's vision is correlated to be.
Yes, that's me. we talk about value, I mean, the value people have in a money is a function of who accepts it. If nobody accepts it, it's worthless, literally worthless. So when we talk about, you know, does it need to be used, in other words, accepted to be valuable? Yeah, but it also needs to be traded actively, regularly, to be secure. The only people who can enforce the consensus rules against a fraudulent money, or what they would consider a fraudulent money, are the people who are actually accepting it. So if there's one company accepting all Bitcoin, maybe Coinbase someday, accepting all Bitcoin, and it's all happening there, only one person gets to decide what the consensus rules are. So it's an important aspect of security that it actually actively be traded, and it's an important aspect of value that a lot of people actually accept it. What they're accepting it for, I agree, is not really that important. But it's also essential that the demand to transact in it is high enough to provide security. And finally, in terms of generating enough hash power, but it's not really the absolute level of hash power that matters to system level security. It's censorship resistant. That's more relevant to double spend protection. Censorship resistance requires that people be willing to pay more for their black market transactions. In other words, the ones that are being censored, than the fee level being paid on white market transactions. Otherwise, there'd be no reason to mine them, right? And that differential is what creates censorship resistance security. So if people aren't actually trading in it, or are only doing white market trades, the security is really not even there. So it affects actually using the money, and that I don't mean using is arbitrary. I tend to avoid that term, but actually trading in the money actively for things that matter, right? Not just spending it to yourself, for example, is essential for the money to even exist.
So you think there has to be some sort of transaction for people
fees
to value?
Yeah.
I mean, if there's no fees, and there's no enforcement of the rules.
The only thing I want to add really is, you can't operate a business without credit. I mean, credit is not necessarily a bad thing. Credit was one of the first things that democratized wealth. Like people were able to actually, borrow money they didn't have to build businesses. And if you're using Bitcoin to just clear your debts, right, your credit cards, it's a great thing. And you are then storing your value in Bitcoin, and you are then having people accept that for back as a way of clearing it. It's used.
Next topic?
Yeah.
All right, let's go. Miners will be regulated as money transmitters, which will end censorship resistance.
Yeah, bring it on.
So,
Eric.
The presumption of Bitcoin is that it's permissionless, which means it doesn't need permission from anyone, especially any state, which means it can operate without that permission. So the assumption is that will happen. I mean, the security model of the system is based on that happening. It may not happen. There's no way I don't give predictions on what will happen, but when I talk about this, I talk about what it's designed to do. And everything in Bitcoin is anonymous. A miner can mine with nothing but public data that miner can verify. A merchant can merchant with nothing but public data that they can verify. They can do this at small scale. Unfortunately, mining is less profitable at smaller scale than larger scale due to what we call the proximity premium. Being closer together allows you to see your own blocks faster, and being a larger pool allows you to reduce your variance. So if the state perceives that it's losing money to Bitcoin, tax revenue from inflation or from transaction transparency, people evading taxes, then the easiest thing for it to do is just simply outlaw merchanting and mining in actual Bitcoin, maybe substitute a Fed coin. So Bitcoin assumes that this might happen, and it allows people to do these things illegally. That's when its security model actually is relevant. So whether it happens or not is not really, whether it will happen or not is not really knowable, because we don't know whether it will grow to the point where the state really cares. But right now we're too small. I've talked to ECB and other regulators, and they just don't really pay attention. because they've got more important things, and they assume it'll just fail on its own. So, yeah, it could happen, and if it did happen, white market mining, in other words, large-scale mining, would disappear, except that it could be run by the state, you know.
So what would that look like? Would it be a problem, or?
Would it be a problem? Well, it's a problem in that the next phase, if that doesn't work, which presumably it won't, because people will just keep mining unlawfully and transacting unlawfully, the state will just simply step in if it cares enough and 51% attack. And because larger miners are more profitable, it can easily be much more profitable. So it doesn't even need 50% hash rate to get to 50% hash power. So that becomes a problem, only to the extent that if people aren't willing to pay extra to get their black market transactions confirmed, they won't get confirmed.
I mean, there's also ways around that too. I mean, you know, there's a lot of countries so you can do jurisdiction arbitrage. You know, depends on which state you're, yeah.
That just means it's a terminology difference, right? When I refer to the black market, I'm not just referring to people operating within.
No, I appreciate that.
The whole country could be black market, it doesn't matter.
Exactly, I mean, but you know, it becomes a cat and mouse game really, you know, because you could also change the proof of work and move on to something else if they did try to waste their time. But you know, Bitcoin would suffer through that too.
Every time you hard fork the coin, you split the community, it gets smaller, it gets weaker, and what happens actually, I mean, this jurisdictional arbitrage thing is one answer to this question I always hear, and really again, that just think of that as part of the black market. Right? The question of hard forking your way out of a 51% attack by the state, it's really counterproductive. It's a foot gun, because what you end up doing is helping them. Even large miners have said this to me. They just retool because they have the capital, whereas what happens with the smaller miners is they go out of business because they're living on the edge, because they make less money on mining. So you actually get rid of the miners you want to keep, and you help out the miners you don't want to keep, and you fracture your community, which means your economy is smaller, your security is shrinking. You do that enough times and you're done, and I think we've seen this in altcoins.
Well, I'm not sure I agree with that assessment. It does feel like the thing about miners is that it's an actual physical thing, and that means that violence can sort of, you know, seize them and so on. The part of that analysis that I think I disagree with is the whole idea that, you know, if you regulate it, that it can come under the control of a state or whatever. First, the economic incentives are really, really high for people that aren't within, like if you sort of quote unquote ban mining, or say it's a money transmitter, therefore you're not allowed to mine. Well, you know, there's a lot of economic incentives still around, and there's, you know, soon as you shut it down in China, for example, then you're going to have a bunch of people in other parts of the world that are going to want to buy those miners from China, bring it over to wherever they are, and use it there. So, like, if the state seizes it and starts using it, it also doesn't require a hard fork. You can do everything with a soft fork. You can essentially do, you know, enough nodes on the network can just say disconnect block on, you know, the state, you know, the chain controlled by China or whatever. And if you have the smaller miners on the chain that is not state controlled, then they're going to make money, whereas the state controlled chain is not. So
it's very hard to tell though, because there's all kinds of ways they can hide their.
Yeah, they can, but like.
And also it depends. I guess it depends on sort of like the size and which state did you piss off enough to fight against.
I mean, you're kind of restating the jurisdictional arbitrage comment that Rodolfo made, but the other part on, you know, soft forking your way out of a 51% attack presumes that you have that everybody who transacts and everybody else who mines has some place to go to know which block they're blocking this week. Right, and that basically devolves to a central authority to determine what's the right blocks to be on.
I don't know.
So that kind of breaks the whole Bitcoin design.
Right. I'm not sure you need to go to a central authority, because it's.
How do people find this block that they're going to block?
Well, I mean, they see a bunch of suspicious things, or they figure it out. It is a coordination problem, but
how do you know which blocks are censored blocks and which blocks are not censored blocks? If the system presumes anonymity, you don't even know it's happening.
No, Could be happening right now.
Seriously, I mean, you know, if you put a transaction and it never gets mined and it's got a high fee, how do you know it's not being censored? You just raise your fee and then it gets confirmed. You know, maybe you incented somebody enough to mine it even though it's unlawful. So once you get to a 51% attack, it might be a little bit more obvious. You know, it never gets confirmed or it keeps getting confirmed in blocks that are orphaned. But you may not know. And knowing which of the many chains that may be being produced are the right one implies a lot of fracturing of the chain, a lot of, I mean, this is the problem Bitcoin is designed to solve, right? We're now looking for another solution once we go down that path.
I think it's the statement is interesting because it's not necessarily FUD. It's like sort of halfway there depending on who the attacker is.
Well, I think
I don't think it's FUD at all. I think it's a very real
Jimmy, you think
risk.
regulatory arbitrage would probably provide a solution?
Well,
Well, Eric, you think it's a real threat, I think.
Definitely will help you know, make it so that it's enormously unprofitable to go and regulate the industry to that degree and say, oh, now you're a money transmitter, you're not allowed to, you know, transmit money or you're under capital controls or whatever. As soon as you have stuff like that, but that's kind of a different question than, I guess, a state level actor. It's true that at a protocol level, it's going to be very difficult to tell, but from a practical level, from a unless they happen to have like amazing OPSEC, which we know states don't necessarily have, you know, it's going to be, I think, fairly obvious to most people that, you know, there is a 51% attack coming from a state actor or something like that. Whereas, you know, if you have something like, you know, just from an economic standpoint, if you do have money transmitter laws or whatever, the economic incentives, I think, are enough to solve that problem in fairly short order.
Let's move on to the next topic. This is based on Rusty Russell's tweet. Once subsidy runs out, fees will need to be $100,000 each for Bitcoin to be secure. Fees will be too high for Bitcoin. Like, it's a legit concern. Like, how are we going to deal with the situation once subsidy runs out?
I think if we get there with enough transaction volume, first, there's going to be enough fees. If there is a market...
But transaction volume is capped right now, at least.
Well, but the thing is, you know, if there is enough value there and there's enough need, people are going to transact. Doesn't matter the fee. It's really just a market.
Right.
Yeah, I mean,
really
as I said before, transacting is necessary to Bitcoin security. And, you know, whether the numbers that Satoshi chose are fine-tuned just right to make everything work out is, I don't know, it's not really the important question when it comes to Bitcoin with a capital B, because I don't consider Bitcoin a chain. And I know probably Jimmy would disagree with me, but Bitcoin's a set of principles that Satoshi laid out, and Bitcoin with lowercase b, you know, is an implementation with a community, et cetera. But, you know, Bitcoin will survive, but the question of, you can't have an inflation-only Bitcoin, for example. I mean, not only does it violates the security principles that are laid out in Bitcoin, which I described earlier as fee premium, is what provides censorship resistance, right? So if you had inflation only, you would have, the censor would get paid the same amount as somebody mining illegal transactions. In other words, there'd be no reason for them to mine them at all. So the use of fees is brilliant, although I'm not even sure Satoshi ever articulated that principle. So if there's not enough demand to transact in Bitcoin, it won't be secure. Whether it's enough or not at that point is not really knowable. How much is enough is not really knowable until the state decides how much they're going to put into attacking it.
I think, sorry, just one thing. There's also this idea where, you know, if there is enough need, but we don't have enough sort of, say, finances to keep this thing going, it's still interesting for some actors in the network to subsidize mining, right? You can still have, they may find their value in a different way. So say exchanges You know, they may want to subsidize some of this mining.
People may
hash bar.
donate. This is actually the idea that Satoshi did propose.
Yep.
In the face of a 51% attack, the community would have to come together and basically donate to mining. It's true, but security has to be economically rational.
Yes.
And it's not really I mean, there is an economic rationality in what you're proposing, right? I have a large stake in this system, and therefore I'm going to donate to the system. Yep. But the problem with it is it's not priced, and when things are not priced, they tend to not work. It's the commons problem, right? I'm going to donate to everybody else so that I get what I want in the end. So there's a limit to how much somebody can donate, right? The state has no limit to how much it can tax to attack. So eventually, even in that scenario, it runs out. It's not priced. You're not getting the direct benefit of what you're using. Fees are priced. You get the direct benefit of what you
The only realistic way I see that happening is through a period of austerity. You know, you have an issue where, you know, we're going through, say, some human issue on Bitcoin, and you know the price drops or whatever. But you know, we're all still invested in this. I can see these people donating the hash power.
Jimmy.
Yeah. So the tweet, I think, you know, having seen the blog posts and stuff like that.
The question is, can Bitcoin be secure in a post-subsidy environment?
Part of it is there's a lot of assumptions in that article as far as the actual numbers, and I'm not sure those are safe assumptions because it's almost always linear extrapolation to the future. Future doesn't work that way. It's almost never linearly sort of like extractable. Usually there are market forces that come into play on these things. As far as like having large fees, you know, if it's there, then by definition that means that there's enough demand to create that, you know, a very large amount of fees or whatever, and that's what people find useful. Does that mean that things will go to a second layer, a third layer, or whatever? Probably, and it's okay. That means that's what the market chose, and the market is us, right? Like it's what people that are using Bitcoin want, and if that's the case, then that's fine. Now, there's a secondary question here of, you know, is that enough security to make everything safe? Well, if you have to pay that much to get security, like Eric was saying, if it's priced, then that, you know, the market tends to work. If that's how much they have to pay to get that security, then, and that's what they use, then again, they're paying for a service. You can complain all you want about how expensive something is, but if there's a finite amount of something and other people are buying it, I would love a Lambo for like $10,000, but that's not going to happen, right? Like there's a fixed amount of those things, or takes a, you know, the price is the price essentially. You only pay it if you want it enough, given the scarce amount of something that there is. I don't see that argument necessarily like going through because of the fact that if there is a market and you know, that means that it's a market. That means people want it.
It's important to recognize that, you know, as there's more demand to transact and fees rise, which provides, you know, double spend security, and as fee premium rises on censored transactions, providing censorship resistance, the fee level cuts out certain lower value transactions, right? Call this the utility threshold. And as that happens, the coin can become less valuable because it can be used for fewer things, right? Only large transactions. And people tend to ignore that when they look at, you know, price, right? Like mining gold, for example, creates inflation, which tends to increase supply when price increases. Bitcoin doesn't have that. It has fixed supply, but it has integral fees, which no other money has. Fees rise as other people transact, right? So the cost of me handing you some Bitcoin versus some gold is very different, right? It doesn't matter how many people are transacting in gold at the moment, I can still hand you the gold at no actual cost. Handing you that Bitcoin, if it costs me $100,000, affects the ability to make that transaction. So Bitcoin reaches a theoretical limit on its value at some point due to fees. And if that's not high enough to protect against double spend security, then there's an issue. But that's not really knowable, how much people are willing to pay.
There's also a second layer, though. That's the big
Layers
thing.
don't eliminate this.
So,
they may mitigate
I agree.
it, but they don't eliminate it because fees still have to be paid.
So, but here's the thing though, you can move the transactions that are below the threshold of utility to a second layer and then to get cleared as batch, right? So you
All right, well,
could aggregate that value.
You open a channel,
Yeah.
how much fee do you have to put on that opening transaction in
You
order
might
to
be
settle?
high enough that you need to batch
If
a
you
lot
put a
more.
$100,000 fee on a 1 penny, and I'm sorry for using dollars, but it's just a habit. You put a $100,000 fee on a 1 penny transaction, and in order to secure that transaction, you have to be able to settle at any time.
Well, you might just have-
You're putting $100,000 at risk in the hope that you do $1 million worth of transacting in the penny level. So it doesn't
but
really
to
solve
me,
the problem.
second layer is always going to be slightly more centralized. So you could have, say an aggregator that's going to have, $100,000 worth of pennies, transactions in there is just going to take longer. The price you pay will be in a different lag.
Basically, means that it's all happening
Yep.
off-chain through a central institution, which is not securable against the state. So you end up with another problem.
You
right?
do lose something. I don't disagree with that.
So the trade-offs
But I
exist,
think
but
it's
the need to
possible.
settle on-chain never goes away, and no matter how much you move off-chain, that fee level will still push back into those other things, right? So it's not. I'm not trying to say it's knowable where that value is. I'm explicitly saying it's not. But there is a risk if there's not enough demand, and in part, you will hit that limit, and then the question is, does that sustain enough security at that point?
Well, so I think your argument that there's a limit of the value of Bitcoin because of the fees and the number of transactions that are able to go through, I think discounts the possibility of innovation that's been coming into Bitcoin as far as being able to compress more transactions into one on-chain transaction.
I just addressed that.
You said it's unknowable, but that's the thing. There's no real limit if you can continue.
That's why I find this to be a FUD topic, because it's unknowable either way. We really don't.
Yeah, you can't make a statement that it is absolutely a problem.
Yeah.
You can't really know. But it is useful to know that there are limits, because a lot of people don't understand those limits.
All right. Do we have time for one more, or?
Yeah, like 5 minutes. Do you want to ask questions as well?
Do we want to get into the culture wars?
Sure. Why not?
All
What
right,
culture
why not?
wars?
All right. The Bitcoin community is too toxic and not inclusive enough.
I guess I'll just put a small thing. Bitcoin is a voluntary system, right? It owes you nothing. And that's a good thing, right? Because it also doesn't force you to be anything, to do anything. You can be anybody, transact and participate in the Bitcoin network without ever revealing really, what is the thing that you don't want others to know. And that's a huge security feature. It's very hard to attack Bitcoin that way. It's just a shame that there is a human cost to this sort of this defense through some toxicity. Some groups will welcome you, some groups will push you away, and I think that's a very healthy way of running an adversarial system. More balkanization you get, as long as we're all playing by the same network rules, increases security, increases scrutiny, and sort of, you pick your group.
Well, I think in one sense, I think it's not toxic at all. In another sense, it's as toxic as it can be. The sense in which it's not toxic at all, like people are gonna have differences, right? Like if everyone has the exact same opinion, that's called a cult, right? And that's not what Bitcoin is by any stretch of the imagination, although I guess that's another piece of FUD or whatever. Having differences is totally okay, right? And that in itself is I think part of like Rodolfo said, it's part of the strength of the community is having differences. There are people that argue all the time. In fact, any two people, if they're talking about Bitcoin, they'll probably disagree about something. In another sense, it is very toxic, but in kind of a good way, I guess. It's, you know, I mean, people can disagree so much that they end up leaving the community or doing something else and going off and, I don't know, say making a hard fork of the coin or something like that. And that's okay, right? Like that's part of the design of the system is that you're allowed to go and do your own thing. Now, as a community, should we be civil to each other and like, you know, treat them the best way that we know how? I think that's an ideal, but you can't really force that, right? Like that's sort of like the actions that a dictator would say, would take to say, well, you're not allowed to X, Y, and Z. To some degree, it's kind of like futile to try to enforce something like that, and generally those efforts tend to fail for the reason that people don't like being told what to do. As far as, okay, well, you're not allowed to say this online. Well, then they're going to say it online, and then they get banned from whatever platform, and they'll keep saying it anyway. So, and then you end up with like sub-communities like 4chan or something, where people are saying like completely, like they kind of get off on like being as, you know, saying as shocking things as possible. So I'm not sure what you, essentially, if you're trying to like police civility, it tends to not work. So for that reason, I don't think it's really
Bitcoin is
effective.
just slightly different. Is that unlike other systems, you can't prevent that. You know, Bitcoin is designed so that you cannot force your preferences onto others, right? It's, if anything, it's the most welcoming sort of system that there is, because nobody can force their preferences on you. Or, you know, if they don't like your race or whatever, it's like you can't force that in the Bitcoin network. And, you know, but you also can't force civility.
Yeah.
But that's very specific for the network itself,
Yeah.
not for the culture.
Well, but there's no such thing as culture. It's a network, it's a piece of technology, and you choose to participate in it or not, to trade in it or not. You know, civility is good for commerce, right? But that's sort of like where it ends.
So
you know, nobody owes anybody anything.
So do you think the Bitcoin community, the people in this room, are they irrelevant for the technology?
Of course, yeah. I mean, if the people in this room are required for Bitcoin to work, then we failed. You know, somebody comes here, closes the door, Bitcoin is over.
Yeah,
At the same time, we're discussing how to evolve this technology, right?
Yeah.
That's the point of this conference.
Yeah, I mean, I think everyone should be nice to each other, right? Like,
That's a good thing.
I certainly hope that you are, but like, can I stop you if you're not nice to me? No, I can't, and that's kind of a feature, right? Like, I can't, if you want to own Bitcoin and you are a complete jerk to me, right? I can't prevent you from like owning Bitcoin. That's part of the rules of the whole thing, is that if you want to own Bitcoin, even if you are like the worst person in the world, you still can, and that's a feature, not a bug. Now, does that kind of suck if I have to like interact with you? Absolutely, but if you're a jerk, you're probably not going to get to interact with that many people. So, in a sense, it's kind of a self-enforcing mechanism, and the incentives are such that if you are a giant jerk to enough people, well, then you're not going to get that much business, and you're not going to, like, there are natural consequences that will sort of, you know, prevent you from being too much of a jerk. Now, where that line is and like how much of a jerk you can be, I don't know where that is, and I don't think anyone can really say. But the right to be a jerk is kind of a right, and that's something that you can't really like force anyone to not be.
You want to get into this at all, Eric?
You know, if you're in a community you don't like, make another community. It's, you know, I mean, this is a very small subset of what people consider the Bitcoin community, and there's so many conferences I don't go to because it's not my community. I don't really care. So I tend to like, you know, pay attention to the things I'm interested in, and I'm half the time I'm not even aware of what people say is going on in the community because I just don't pay attention to those things. So you have a choice, I guess, is what I should say. There are certain things, you know, always be nice, right? That's good, but that's not always just the way it is. I think a lot of times in the stuff I do see, there's a lot of discussion and argument that's based on personality. You know, who somebody is doesn't matter. You know, the arguments they make are interesting to me, and I don't, you know, somebody posts something with the thread and I find it interesting, I don't even really notice who they are. I just, you know, it's the discussion that's interesting, at least for me. But there's an awful lot of communication I see that's just based on a person, you know. And so I just avoid those things.
I mean, the fascinating thing is that, you know, if you are more civil, nicer, it's more likely you're going to be able to get something merged. You know, because you can, seriously, you're going to piss off less people. It's a tool, but it's not a requirement.
Yeah, that's a good way to put it.
Do you have time for a question, or no? Not really. Kinda. One question. Does anyone have a question? Is there a mic somewhere? Oh, there's a mic there. Any questions for the panel? Right there.
Do you think that over time we might come to regret wasting block space on only locally relevant transactions, making the whole blockchain so big that it might be less censorship resistance 3-4 years down the road?
Wasting block space, I think, is the
I
question.
don't think there's a waste, it's a market.
Exactly,
Stuff goes
there's
in
no
there or
such, there's no such thing as waste.
Yeah.
People pay for it.
Yep.
They get what they pay for.
It's like even spam. It's not really spam. It's just
Exactly.
people are paying to putting it there.
Yeah.
Well, let me rephrase. Might we regret in a few years how big the blockchain has become?
Oh.
Well, it's going to be how big it is, assuming there's full blocks, which means sufficient demand. So we should hope it's full, and you know,
Full is good.
and that will be the size. I mean, roughly, you know, 1 meg. So the past is the past. There's no change in that going forward. Can we regret the fact that not all the blocks were empty in the past? No, because then we wouldn't be here. You know, how useful a particular transaction is to the community is kind of irrelevant. It was useful to somebody, or they wouldn't have, you know, created it and mined it.
I think the bigger question is, like, you know, are the resource requirements of running a full Bitcoin node going to be so prohibitive because of the size of the blockchain and stuff? And that's hard to know, right? Like, because we don't know what will get more popular with, you know, CPU, RAM, and bandwidth and storage and all that stuff that sort of goes into that. So we might we might regret it because if people are running fewer full nodes, then yeah, we very well might. But you know, is that likely? I mean, just given like current hardware, I'm not sure it's in a few years' time. I think you're going to have to look 10, 20 years down the road to be able to make that determination.
All right. I think that's it. All right. Thank you. Thanks, guys.